Trader Tim, TJMacTrading.com. Going to be doing a little two-part video on support or resistance levels and how to identify those levels. So this first video, I just wanted to give a brief overview of what support and resistance is. And support can be thought of as the floor and resistance as the ceiling. So if we have a price level or a price consolidation level here, we can simply draw a line connecting the lower half of the consolidation and then draw a line at the top range of the consolidation. So we have these two lines here. Now we're trading in this level, or this room if you will, and the upper line acts as the ceiling, the lower line acts as the floor. So the floor is supporting you. We see prices come down and touch the floor or the support level multiple times. We break a little bit below but push back through, and then as we move higher, the ceiling or the resistance line is pushing us back down. So we come down to the support level, we move back up to the resistance level, and then we push back down to the support level and up to the resistance level. Now these levels are important because they carry through across multiple time frames. It's important to understand that this support level may become a resistance level in the future. And if we simply move back down the chart, we can see that what was once a resistance level, here, prices came up, hit their head once, twice, they were pushed back down and finally broke through a third time. This resistance level now becomes new support. When we pull back to an old resistance level. So old resistance becomes new support, and vice versa. Old support becomes new resistance. So these are a couple things to think about in your trading, is support and resistance levels. And again, it's important to go out to multiple time frames. So this is a daily chart. We can go out here to a weekly chart and expand our time frame here. Go out to a couple year weekly chart, and we can see that we can draw some trend lines on the weekly chart here. Maybe this gap down here, which was a old high. We can take this cluster over here. We can go down and perhaps take this low cluster down here. And when we switch back to a daily chart, extending the lines to the right, we can see that we have a cluster over here that acts as resistance not only once in January, but again in May. So what was a horizontal trend line over here acting as some minor resistance held through to January and to May, and we didn't break out of that until over here in July. So it's important to extend your trend lines to the right, your support and resistance levels, and it's important to draw them as areas or dotted lines and not necessarily hard solid lines. Another thing you can do is simply draw a box, which would be something like this, and this acts as a range where the support is the bottom area of the box, and the resistance is the top area of the box up here. If we break above or below those points, then it would be considered an action point and time to take a bias. So stay tuned for the next video, and we'll go into a little bit more depth on using support and resistance areas in your trading. For now, check out the blog TJMacTrading.com.